Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, December 3rd, 2021. As always, please don't forget to hit the like button, subscribe to this channel, and share this video. So as usual, we're going to cover stocks, we're going to look at junk debt, treasury bonds, the yield and the yield curve possible inversion. We'll look at dollar and gold relationship, oil and natural gas, and Bitcoin. If you're a subscriber, we will also look at these various securities in separate videos. If you're not a subscriber, consider signing up at MasterChartsTrading.com. Alright, so let's get right to it. So let's look at first S&P 500. As always, I'm using my proprietary MasterChartsTrading.com price action indicators, this green, blue, red, and yellow lines, and this is pretty much all I use for trading, and it's quite useful. If you're not a subscriber yet, sign up. So looking at this chart, S&P 500, we did hit records just recently, really, on 22nd of November, and since then we're kind of been just sliding down, sliding. We can look at the weekly chart. So the weekly chart pretty much shows the same thing. We're looking at 2 weeks of downward pressure. So far, this downward pressure is continuing, and we are experiencing, I guess, fear. So we have two driving forces in the markets. One is fear, one is greed. Greed is, fear of missing out. Fear is just fear of losing the capital. So right now, what I'm seeing is preponderance of fear of losing the capital. And in a few minutes, I'll show you also the Treasury bonds, which are considered safe haven assets, and they are gaining in price indeed. So this is, pretty much what's happening as far as intermarket relationship. Now, as far as S&P 500, we're currently at first support. So this green line at 45.48, this is a first support resistance line. It has technically been broken because we saw a close below it, but this happened in the past. For example, you can see there was a close below it here in October, but then we rallied. And so this is a weak support. We can see the same examples previously, for example, here in September of 2020, and then another one in October. So overall, the green line provides what's called a decent first support, but the first support is usually quite weak. So what we need to do is we need to look towards a push towards the blue line. Most likely it will happen. So we're looking at 43.11 as the next stop for the S&P 500. I think we will get there probably within the next few weeks, so most likely before the New Year's, I'm guessing. The way I'm hearing about things like Omicron right now, it's just does not sound good at all. And I just read an article that it is now hitting children. So that absolutely will cause more fear, and fear of not losing out, but fear of losing the capital. So most likely selling will continue. I don't see an end to it. We can look at 4-hour charts. Here's the 4-hour chart. So when I look at 4-hour charts, I always look at the continuous security. This is a continuous futures, you see. I'm not going to look at S&P 500 ETF SPY because there are gaps. See, there are all those gaps for the 4-hour chart. We can also look at the 1-hour chart, for example. Here's 1-hour chart of S&P 500, and you can see how nicely it just does. So there's the breakdown. I'm going to show you what I mean here. There's the breakdown on 25th of November. And then since then, we are seeing continuous downward pressure. And there it is. Okay, so if I was trading it, I would have done something like this. I would have kept selling it. Basically, I would have kept selling it. And yeah, look at this, how nicely it lines up. So the latest opportunity was actually today, actually. Yeah, so this is a 1 hour chart, very, quick. There is a good chance we will rally towards 45.85 again, but there's no guarantee that we will do that. And additionally, if we do rally towards 45.85, and you can trade, futures, and I would consider selling it short. But for now, really, there's not much we can do as far as, predicting. We're just gonna have to see where it goes. Here's NASDAQ QQQ. Overall, again, the correlations between S&P and NASDAQ are quite high. So usually NASDAQ is more volatile because there are more volatile stocks in it, and this candle from today is quite bearish. There's very little buying pressure. I think most likely Monday we will gap down. Again, for NASDAQ, there's a great support here at 366, 367 or so. So we will look for a buying opportunity there. But the way things are going, I'm gonna be looking at intermarket relationships quite strongly. And again, once we get to treasuries, I'll show you what I mean about the fear increasing. This is quite unusual. For the past, close to a year or so, we did not have this type of relationship, and now we're having this relationship where fear is quite pronounced. And again, here are the small caps. Small caps are actually already, you can see they just collapsed below the blue support resistance line. Notice that it just did not hold here at all. We can also look at weekly chart of IWM. Here's small caps on the weekly chart. You can see it collapsed below this blue support resistance line. It was at 222, closed below it, and look at this, 4 straight red candle. So there's a good chance we will try to bottom here, but overall that's not a very good sign right this instant. So for now, I am basically not really buying any stocks. I'm just holding on with any kind of purchases. I'm just waiting to see what's going to happen, especially small caps, because notice how strong the selling was. So let's wait and see. If we get to the red line is basically caution, and it's like a warning sign that we are about to break down into a bear market. Bear market for small caps is at 196. We can look at Russell 2000 as well. Let me see, where is it? There is Russell 2000. So Russell 2000 continuous index. That's at 2098 would be a caution, and bear market is at 1976. So let's again wait with this, any purchases, and let's just wait and see where this goes. There's junk debt, and junk debt really was the number one that gave away this whole fear. So the way I'm looking at this junk debt chart, so notice how these lines, they were really wide apart, most of the year, and then all of a sudden they came really close together. And notice here we broke down into a bear market for junk debt for high yield bonds. Why do I worry about high yield bonds? So I'm going to show you the correlations. Correlation and causation are not the same thing. However, they're quite useful. So correlation between S&P, this is correlation between S&P 500 and junk debt overall is quite positive. Occasionally we get a negative correlation, like we're having right now, but overall, if one goes one way, the other one follows. So Notice again how wide apart the lines were, how close they came together. So this is clear indication that something is different this particular time. See, the previous times where I showed you S&P 500, we did not have this type of breakdown for junk debt. So for example, here back in October, October, we did not have breakdown of junk debt, but now we are having the breakdown of junk debt. So this is not a very good sign at all, and I think that it's possible that high yield bonds are actually leading the stock market lower. Now, I don't want to cause panic, but this does not look good to me personally. This does not look good. So we may rally from here, and notice how close the lines are together. So it's possible that we'll just come right back and get back into the bull market. But for now, I am going to be more cautious. Again, I'll be more fearful of losing my capital than fearful of missing out right now. And here the TLT, the Treasury bonds. So Treasury bonds, especially the TLT 20+ year Treasury bonds, are normally considered safe haven assets. So they are bought during the time of financial stress. Additionally, their correlation, this is a weekly chart again, the correlations are mostly negative. So when S&P goes up, Treasury bonds usually go down. You can see they're mostly negative. They're not 100% mostly negative, but overall, mostly they are negative. So I am treating this quite seriously because, again, the fear is pronounced. This is fear. When Treasury bonds are increasing in price, there is pronounced fear. Notice also previous 2 attempts to sell. One attempt was in the week of July 6th, another attempt right there on week of October 4th, completely failed. Nothing really happened. There was no follow through to the downside. Compare it to the previous 4th of January attempt. You could have gotten in on 25th of January, week of 25th of January, big collapse in Treasury bonds. Now we're seeing the opposite. So this is intermarket relationship. We're seeing S&P under pressure. We're seeing Treasury bonds move higher. I am actually long. I bought Treasury bonds. I'm going to show you where I bought them. I bought them right there on 26th of November. I bought that at 150.15 whatever, and they actually already reached the target. So what I'm going to do is I'm going to move my stop to entry and see how high this Treasury bonds will go. So continuing on, so we're looking right now at 20-year government bond yield. So currently it is at 1.759. Notice that number, 1.759. The 30-year yield is at actually 1.678. So think about it. The 30-year yield is lower than the 20-year yield. Okay, this is not normal. Okay, so I'm going to show you the Treasury bond dynamic yield curve. And you can see on this yield curve that this is, let me see, December 3rd right there. So you can see that the 20-year yield is higher than the 30-year yield. Now, it says that this is a normal yield curve, and it is indeed still normal. I'm going to show you abnormal or inverted yield curve. There's an inverted yield curve where the short-term yield is actually higher than the long-term yield. Now, in the past, this happened. You can see we had a drop, bear market of 2000, and we had a bear market of 2007. So it is not there yet, of course. However, we're seeing potential beginning of this inversion. Too early to tell, but I don't want to take any chances. And right now, Treasury bonds are going higher, so might as well play them on the upside. You really have hard time losing because you're getting dividend or coupon income as well. in addition to the capital appreciation. And with all the fear that seems to be building up, being in Treasury bonds actually kind of makes sense from the just a pure stodgy investor point of view, not even a trader point of view. So once again, Treasury bond yield is dropping. So TYX, here's a 20-year Treasury bond yield. You can see big drop this week. Actually, it closed below this red support resistance line. So this is now officially in the bear market, and that means the longer term bonds are most likely going to be moving higher. Yield and price of bond move in opposite directions. Here's the 30-year Treasury bond yield. Again, notice the big red candle. Notice how it dropped, and this is actually a 52-week high, or rather low for the yield. So low yields, no matter what the Federal Reserve says, no matter what they're tapering and whatever they're talking about, the market is deciding for themselves. So right now I'm seeing fear with or without tapering. Right, so let's move on to Forex and various commodities. We're looking right now at dollar, DXY, dollar currency index. So dollar currency index broke out right there where I'm hovering on the week of July of 19. This is a weekly chart. And notice big move higher. So what does that mean for various other commodities? So strong dollar usually weighs on commodities, and indeed this is what's happening now. Gold is a commodity, don't forget that. So you can see that the price of gold did rally, but it just collapsed in the last 3 weeks. So right this instant we're sitting on this bearish level, about 1783 or so, and it's possible we can take out this August lows. It's entirely possible. So people will say, but wait, what about the inflation? So this is very interesting because the way things are going, if there is fear in the markets, there is not really inflation, but there is most likely going to be deflation. So if they are going to start tapering bond purchases, we might actually see more deflation, if anything. So gold is reflecting that, and if we take out this low, then of course I don't see any inflation right now. The inflation meaning like collapse currency collapse kind of thing. Clearly it's not happening because dollar is actually gaining in the price. So this is one of those least ugly dogs kind of thing. So we're seeing dollar appreciate against other currencies. They're all ugly. All currencies are ugly, but dollar is not as ugly as others. Oil, CL1 exclamation point. So multi-year highs on the week of 25th of October, and nothing but selling for the past couple of weeks, actually several weeks. Looking at the daily chart, I'm gonna zoom in, gonna show you what I mean. This level, $60, is bearish. So I think if we close below the $60 level, we can easily just collapse to like upper 40s or possibly lower. Why? People will ask me why. I don't answer that question. I only look at how and what. So at this point, I'm looking and saying, the chart says that if we close below the $60, most likely we'll continue to move lower. Why? Maybe because they're pumping more oil, maybe because the demand is about to go down. This is deflationary, okay, in nature, once again. The biggest news, I think, is of course natural gas. And I mean, I read during this September-October period, there was this articles in Wall Street Journal and elsewhere about how Europe is running out of natural gas and how we're about to see, people freeze to death because winter, of course, is coming and the prices must go up because it's going to get colder. Now, looking at this chart, there were clear indications. Look at this. 1, 2, 3 huge, enormous candles with shadows out of the top. This is indicative of resistance. This means bears came in and says, no way, we're not gonna be buying at this levels. We're gonna short them at this levels. And enormous candle today, this week. We're looking at bearish levels are a few percentage points away. Look at this. We're 7% away for natural gas. 3.82 is where we're gonna, most likely we're gonna get there. If we close below that level, I think we'll easily get to about $2.90, possibly even $2.50. So despite all of this talk about how, winter is coming and there's going to be a shortage of natural gas, for some reason the prices are actually dropping. And once again, please disregard the news. Look at the chart. See, this chart is really clear. Here back in, December last year and as early as April of this year, yes, we were buying it and we made huge amount here. But right now, I don't want to be buying this. I might want to be shorting this if we get to 3.82. So be on the lookout and, once again, avoid reading into the news and especially avoid having the news influence your trading decisions. And wrapping up with Bitcoin, so I'm going to look at daily chart of Bitcoin. So currently, this is actually a live chart. So notice here, previous alert was quite good here. This is an actual alert, 6th of October, good for like 28% move. It's a pretty nice move. Now, right now, I did not send this alert right there from 27th of November. I was like, I just don't really like this. And this really big red candle here, I don't like it. So I'm going to wait and see what happens because there seems to be generally speaking, a deflationary spiral of some sort that's happening. So let's see where Bitcoin goes. It's entirely possible it will move lower. Again, despite all of the news. So let's see. It's possible it will hold here, but I wouldn't necessarily rule out a continuation towards bearish levels. Bearish levels at the 43,800. I'm reading it right off the chart right there. And this brings us to the exciting conclusion of this presentation. So head over to MasterChartsTrading.com, one word, MasterChartsTrading.com. This website will be renamed very soon. I'm working on everything new. There's going to be also, hopefully very soon, an actual trading robot that we will be able to rent out. And that's exciting news. But for now, if you want the indicators, which are these lines on the chart, you can basically trade any security and it will help you very much. So go to and sign up for trading indicators. If you want also my newsletters, so I have 2 newsletters. We cover various securities. So you can see this week we're not that many securities because really all we were doing is just kind of closing our positions mostly. Not really buying anything new, we're just waiting. But yes, we still had a bunch of positions and we need to manage those positions. So this is what I do. I send out, alerts to buy. It's not really an alert, not really an advice, but more like things that I'm trading myself. So sign up for that if you're interested. Also, we have a stock screener, so you can screen stocks and find the ones that are, for example, breaking out above the blue line, or you can screen the ones that are breaking down, so you can, for example, short them if you so desire. All right, that's it for this week's recap. Again, head over to MasterChartsTrading.com, sign up there. Otherwise, thanks for watching and have another great trading week. Bye-bye.